Good afternoon, everyone. Rich Swerbinsky with the Mortgage Collaborative here with the last week in mortgage today. If you're on video, you could tell I'm not at my normal desk with the baseball cards and the sunny window in the background. I'm at the MBA annual, the Super Bowl of mortgage conferences in the Expo Hall. Give a little pan of the madness in here. A lot of people eating lunch, doing my best Kevin Cranio impersonation. He's much better at taking videos and talking than I am, but we're going to give it a whirl today. So a little different type of show today. Don't know if we'll go the full 30 minutes. As always, still welcome your questions, comments, put them in the chat, the Q&A, and I can answer them. No co-host today. And basically just want to give a little blow-by-blow on what the vibe has been here in Nashville. Obviously tough time for our industry right now, but a lot of optimism. I mean, companies are here typically going to be like TMC members, more optimistic than the mean. Obviously, at the same time, it's business owners are they're reassessing their business. I think most are operating in the mindset that it's going to be a tough sledding these next 18 months, and really acting accordingly, really thinking through the future of their business and, what they want it to look like once we come out the other end of this. Good companies, very opportunistic. So many companies I've spoken with these last couple of days, really looking at this climate as an opportunity for them to grow market share and to do what they're doing. To grow scale through this, which we know good companies, every climate we have like this, it happens. So Sandra Thompson, some big news that came out. Sandra Thompson was our friend Sandy T. One of the keynotes, she announced kind of giveth with one hand, taketh with the other. Higher delivery fees coming for cash out refis, which we all know will be a bigger part of our business these next few years. But reducing or eliminating completely the delivery fees on affordable people at or below area and median income. No specifics on that yet. More to come still, but that was a positive development as well. It was pretty well attended conference. More people not registered. Had to bopping around town a lot. People that couldn't get into the convention center. Were some great keynote speakers here. Two of my favorite people, Paul Ryan spoke, former Speaker of the House, VP candidate. It was really interesting. Paul Ryan, he won getting inside baseball in the current political climate, and his take basically being politics right now is almost entertainment. People placating to their bases. And so Brad from MBA. Brad, say hi.
Hello, everybody.
Good friend, even though he's a Cardinals fan. Brad, great guy. MBA, great job at the conference this week.
Thank you, buddy.
Love Paul Ryan. Coach K this morning also was really good. But sticking with Paul Ryan, I'm sorry. His analogy was with our business. He's like, listen, I'm from Wisconsin, so I deal with a lot of farmers. And farmers, they do what's called cost averaging. You have a good crop? Okay, hey, every crop's not going to be like that. So I thought that was an interesting analogy. You have a lot of inside baseballs to the political climate. Ryan came out a couple weeks ago and made comments that he doesn't think Trump should run. That made a lot of news. So he was asked about that, but I thought he was phenomenal. And then Coach K, the former Duke legendary coach, spoke this morning, just really talking about, as it relates to our industry, the need to reinvent yourself, putting good people on your bus. Told some just really amazing stories about coaching Kobe Bryant on the U.S. Olympic team, seeing Kobe tear up when he gave him his Olympic uniform for the first time, made me tear up almost a little bit. Also, Coach K talking about his battle with mental health on the back end in the mid-'90s of the run where Duke went to 7 Final Fours in 9 years. I had never heard this before. He had major mental health problems, had become like a maniacal micromanager. He talked about that, offered his resignation to Duke in 1995, on the heels of all this. Long story short, they said, he went and got mental help, mental health help he needed. Obviously went on to have phenomenal rest of his career. So some good energy, a lot of good discussions. I love this event because it's the biggest event. You talk to and meet with the most people. You hear and see lots of good ideas, lots of really creative discussions about the climate we're in and ways to get out of it. All in all, it's been pretty upbeat given the climate. So,
Rich, you've got a question in the chat.
okay.
Someone's wondering what you're hearing by the way of LO recruiting over there at MBA.
All right, LO recruiting. Obviously, everybody's recruiting everybody, is what I'm hearing. I just think now there's so many great companies out there. TMC's got a couple partners in the space that do a very good job giving lenders that wanted data about loan originators, who they're doing business with, who they're getting referral business from. And, that's obviously being leveraged a lot. I think a lot of LOs are amused by it, have a tin ear to it to some degree. But it is and will continue to be one of the huge narratives driving our industry, because there's not a lender in America. Well, I don't want to say that. Everybody always wants to grow and says they're growing, but the importance of scale right now is obviously important. So it's going to continue to be a big part of the thing. The one thing I've heard less of is the crazy, stupid deals, the guarantee rate, write the blank check and back up the Brinks truck, and a couple other lenders that made a lot of headlines this year for their recruiting tactics and methods. Certainly still some of that going on, but just every month that you're in this tough climate, it right in theory lessens lenders' abilities to do stupid things up front with LOs and signing bonuses and things like that. So, but it's a sore spot, obviously, to stereotype a little bit. The smaller lenders are very frustrated by it because, their LO base is, they feel, kind of under siege. And, but yeah, it continues to be a topic for sure. So, trying to think of what else from this week. If anybody has any other comments or questions, go ahead and incorporate them into the chat. A lot of lenders on the sidelines right now in tech decisions. Obviously, you got some potential mergers and acquisitions that lenders are trying to figure out what that means for them and if it should impact their decision making on what they're doing there. There is an unbelievable amount of lenders on the tech, what I would call the tech sideline right now. I think in general, what I'm seeing is lenders they're again, always in this mode, but right now really hyper focused on meeting with people, understanding what they need to do with their tech stack and platform when they feel it's the right time to make that move. There is a lot of that out there right now. Interesting dynamic to the current climate. So, because obviously the vendor community is hurt and struggling as well. All the headlines and notes are about the lenders, and the drop off in volume is really interest rate driven, but a lot of great third-party providers to the mortgage industry that it's frustrating for them as well. It's a lot of lenders are on hold right now in terms of making decisions on new partnerships. So we'll see how that all plays out. Trying to think what else of note this week. MBA's official Mike Frattantoni came out with his most latest official projection, which is, I think, 30-year fixed rates 5.4 by the end of the year, recession next year that maybe brings them down a little. A lot of talk this week about there's a lot of prevailing thought out there that it may be a very long time before we see sub 5% 30-year fixed again, which I'm not sure where I'm at on that 100% yet. I think that, it depends on how deep of a recession we go into. I think the Fed right now, they're really trying to stick the landing with how they're fighting inflation. They need higher unemployment right now to help with that. There's some signs that it is working. If it does not work, or we see some regression in the inflation numbers and people still spending like crazy, we'll see. I mean, it's again, we know what happens during recessions. Interest rates are very low as a tool to kind of help get things out. So, the Fed's fight against inflation, how successful it is, you can make the argument the less successful it is, the better chance we have lower rates. But the byproduct of that would be a deep recession. That would be bad for the economy and our industry in other ways. So I think what we want is the Fed to stick the landing, to get back down to where MBA and others are now projecting 5.5, 30-year fixed by the end of the year. But a few days of rally in a row for the market. We've talked on this show about the fear and loathing that's priced into the markets right now. It's overblown. I truly do believe that. It's 300 plus basis point spread between 10-year Treasury yield and a 30-year mortgage bond. That historically is 175, 200 basis point spread. Exchange for the risk that a mortgage-backed security has. Treasury obviously does not. So, but
Hey, Rich, another question here.
Okay.
Regarding Sandra Thompson's comments on LLPAs, was there any details, additional information on specifics, such as how much will cash out adjustments increase, et cetera?
I think her exact comment was as soon as humanly possible. So you could tell, like, I just sensed a level of frustration from her that she didn't, maybe didn't have something to announce. This is typically a conference where you get a lot of big mortgage announcements, and she made a big one, but it lacks specifics. So, I think my guess would be, we typically, it's one of two things to me. It's either we typically get the conforming loan limit change around November 1, so we could get it hand in hand with that in the next week or so, or maybe we get it closer to the end of the year. Also, a lot of just positive hubbub about Ginnie Mae's decision to delay the capital rule change from Feb 1 of next year to Feb 1, 24. This gives lenders who got to navigate around that a little bit more leash, and it's a positive thing for the industry. I think right now, any additional stressors, you don't make sense for mortgage lenders right now, and that was, I think, again, it's a case of elected leaders listening, to their constituents, and again, politics aside, it's Democrat, but who cares? Like, we have leaders in this industry right now that want to listen to mortgage lenders. I cannot remember the last time I've seen that. It's been a very long time. Genuinely want to listen. So that's a good thing. And I think you're seeing that in some of the policy changes, honestly, like the FICO change. Another announcement I forgot to mention that that Fannie or FHFA announced alternative FICO alternatives, Vantage Score and others that are going to be able to start to be accepted by Fannie and Freddie. Again, another good thing for the industry. All these little things on the margins help. If it's reducing loan level price adjustments, or changing the way that people can their credit is assessed, allowing rental payment history to be incorporated, right? That makes sense. I mean, so all these little things help.
Rich, is there much talk about the Fifth Circuit's ruling about the CFPB?
The Fifth Circuit rule. Oh, yes, absolutely. Yeah. The fact that their funding source unconstitutional. Yeah, Bob Brooksmith talked about it. And I got to say, listen, you know me. You might listen. I'm going to tell it how it is. I am a straight shooter. Occasionally it's got me in trouble. I love Bob Brooksmith. I love the guy, honestly. There's no better guy to be leading this industry right now. He is professional. He's incredibly intelligent. He's well respected, most importantly. Not that his predecessors weren't, but he is the right guy for this industry right now. He touched on a number of different topics yesterday, including that one. And I think his thing is that, it's tough for him he has to be guarded with his comments, but you can obviously tell he feels like, the way the CFPB was set up. And again, I don't hate the CFPB. Like a lot of our lenders are like, oh, screw the CFPB. The world, especially for a small to mid-sized lender, the world without the CFPB would be much harder for them. Trust me. And so I'm not anti-CFPB, but the way that Elizabeth Warren set the organization up was designed intentionally so it did not have oversight, so they could get more done. So, from who it reports into, it's funded through Treasury and not the federal government budget. And that's essentially what the Fifth Court ruling was. Broke Smith's comments on it were, along the lines of, I agree with the ruling without exactly saying it, but expect a full appeal. So, it don't, nothing to see here, but nothing to immediately see here, because they're going to certainly appeal the ruling. And it'll still be a little bit of a runway before we have any sort of clarity about the actual legality of their funding source. So hope that answered the question. I'm trying to think of what else I'm hearing and seeing out here. I see something in the chat. Affordable housing, new construction. Oh man, I hate to be Pollyannish, but I don't think there's any help coming for the builders. I've talked about this for a long time. Short of incenting builders to build smaller homes, there's no reason they would build small homes otherwise. Let's just be honest. So, I think the administration is more focused on what they feel like they can do to help alleviate this, not only the current supply line issues that plague housing, but future potential ones that are, still a byproduct of the, continuing war in Ukraine and other things that are still emerging with the U.S. and world economy. So I don't think you're going to see anything from Congress on homes for builders and to help get more small homes built. And to me, that's a shame, because ultimately that's the only way out of this inventory issue. All these little things on the margins, it'll help a little, but we need to build more homes. We're not building enough as it is, and that's completely slowed down. And we have no inventory currently. So it's just, to me, it's short-sighted that just hoping that the free market is going to take care of this, because builders can't make money building the types of new homes that we need. What's going on, Brandon? So, we'll see what happens. I don't anticipate anything else.
High quality manufactured housing.
Now, so that you will see. Okay, so I heard Sandra Thompson speak about this. Essentially, she was talking about how she has become so educated on she's like, I'm like most people. When I hear manufactured housing, I'm thinking double wide and stick built, and some of these new manufactured modular homes are incredible. Chrisman and I, a month or two ago on the rundown, talked about one company that we saw where they crane in essentially like a modular home in a shell, and the thing is they drop it in with a crane, and the thing is erected and put together in hours. So I do think that type of stuff you're going to see more of. Fannie and Freddie clearly are doing a lot of different things to promote and be more regular and better buyers of manufactured units. But I think a big part of that is education. Honestly, even at an event like this, they should be doing something here, in my opinion, the to promote it, because I think most lenders' perception of manufactured modular housing is not entirely correct. And if we know we're going to be in a climate where the builders aren't going to build, and there's a huge need for affordable housing and homes in general, that's going to be a big part of it. So I think all lenders need to really educate themselves on that issue. Would be my advice there. Anything related to manufactured modular homes, 'cause it's going to be just as easy to originate and sell those to the agencies, almost as easy as a regular single family. So, oh, let's see. Anything else in the chat? Trying to think of what else I heard this week. A lot of parties. People are still partying in the mortgage industry. So there's a lot of night events. So, there's a lot of companies in this industry right now that are, how they do these next 3-4 months, gonna say a lot for them. So, we're still on budgets for 2022, which was expected to be way better than it is. So I hope we just had our biggest conference ever in Chicago. Our organization, one that, this is what we were built for, times like this. So our engagement is at all-time high levels, and our attendance at conferences and things like that. And I hope the same for MBA. I hope that this is not the last really big MBA show where you see an expo hall like this and the number of people, because there's a ton of value in it. I mean, like somebody like me, what I do, this is like gold to me, to be able to come to a show like this and just talk to smart people for 3 days, lenders, vendors, industry leaders. I try to accumulate something Coach K talked about today, like never stop learning. Knowledge is power. It's so true. Oh my God. And, being able to come here and just talk to just hundreds and hundreds of people that are very smart and I've been in this industry a long time. And then to take all that, to try to ball it all up and make my own personal sense of it, it's valuable to me. So let's hope that people keep coming to shows like this and exchanging ideas and speaking with leaders. And it's one thing I've heard this week, we hear it at our conference as well. It's like, man, it's good to get out of your silo. Especially this year has sucked. It's been tough. People are still Jim Park has been in another video. There he is, and Lori Brewer. Jim set the MBA annual record for most videos that he's been a part of this week. So what the hell was I talking about? I completely lost my train of thought. I don't know. But Amy, anything else in the chat? Any other questions anybody has? Try to answer anything I get in terms
Nothing
of the
else in the chat, just great info. You're doing great without your guests.
I've got like 3,000 steps in since the show started.
I was gonna say we've seen
a lot of walking in Nashville. So
yeah.
But well, good stuff. Sorry, a little bit of an unconventional show today, but wanted to give everybody a little taste of the vibe here in Music City, and a little what we're hearing on the ground report. So instead of just skipping the show. So, but as always, greatly appreciate you guys tuning in with us every week, every Tuesday, 2 p.m. Eastern. Last week in Mortgage Today. Next week I'll be back. The rest of the year, I think. No more travel. I'm looking forward to that. At my familiar desk that poured you guys all the dough with all year. So really appreciate your attendance and consuming the show. And we'll see you next Tuesday. Take care, guys.